Good morning. Welcome to Market Wake Up. My name's Jordan. This is John. You are watching the one-stop shop to get you up to date with everything you need to know before you start your trading day. John, they did 50 basis points. Let's get into the Market Wake Up. John, good morning to you. Everyone in chat, good morning. Paul Musclay already in here. Good day to everyone and everyone tuning in. I won't stress it enough. When you get here in the mornings, I want to hear from you. It's your daily chore. Get in there. Let us know you're here. It energizes us. It makes us feel like we're doing good. We like hearing your opinion. So I'm not going to lie. If you haven't been able to tell, the two of us are quite opinionated. We like your opinions too. But good morning, John. Welcome. It's Happy Hump Day. Happy Hump Day. Adil's popping in as well. Adil, good morning to you. What's been happening, John? You feeling good this morning?
I'm feeling all right. I actually thought I was getting a cold, but it seems to have been battered away, which is good.
That is best case scenario.
Yeah, I feel like I was really coming down with it the other day, and now it's just completely moved away from me. So I'm quite happy about that. So yeah, I'm good in health wise, I guess. I haven't took a trade since Monday, so I'm still kind of waiting to see what happens today. Some big stuff actually coming up today. So it'd be interesting to see how the markets kind of develop in the way I think it might. So interested in that sense. But other than that, I'm good. How are you?
Yeah, not too bad. I mean, I'm watching my currency just drop off a cliff. So I'm a little bit concerned about that. But Aussie dollar is just continuing its downfall. I've not been too involved today. I've been wanted elsewhere. Which is it's been a manic day, but overall, no, I'm feeling pretty good. I had some good feedback on my crack trade as well. I'm glad you guys enjoyed that piece. If you missed the big bite from yesterday, make sure you head back and have a little look into it. But I'm feeling positive. I'm feeling positive this morning, and I mean, I look at the charts and it's not looking overly positive, but as a whole, I feel pretty good. I'm keeping a close eye on those oil prices as well, and bonds are relatively unchanged. But the big market leftover is the RBNZ. We spoke a little bit about the RBNZ. We spoke. I dropped a little hint yesterday about the strange correlation with milk futures dropping off a cliff from October into December, yet New Zealand dollar strength through October into December, which is just a strange correlation there that I can't quite put my finger on. 50 basis points as expected. Well done. Yesterday you were a little bit nervous to pick a side. You picked the side. You picked the right one. So I'm proud of you. It looks like the market also was very much expecting that 50 basis point drop because not much really happened. We did see a little bit of a fall off in the New Zealand dollar, but it's not something that we haven't already been seeing. Just to share the chart with everyone at home, you can see the New Zealand US dollar here looking very, very similar to what the Aussie dollar as well. We did tend to get this rather large sell-off that we've been having. We were sitting at the box here, I like to call it, which is at 61. Which is this floor that we were testing back in early September, ripped through it now and moving back into this price area between the 62s and the 59s, which is going to be an interesting one. The seasonal pattern suggests that New Zealand US dollar does gain strength all the way into December. Will this year uphold that? I'm not sure. It's the election year for the US, which is coming up in less than a month now. We're obviously seeing the commodity currencies and therefore the New Zealand dollar also be pulled down from that, plus a 50 basis point cut today and data which suggests it's not too pretty, which I find interesting. I know I'm ranting here and I apologize. I'm just following my brain as we go. That now makes the Federal Reserve, when we're talking major currencies, the highest interest rate.
It does, which kind of begs the question of, does the carry trade start to...
US dollar strength is something we're seeing at the moment.
Yeah, so that's a good question.
The jobs data. I mean, the carry trade could be back on the cards. Ooh, but it wouldn't be with Japanese yen. I don't think it would be with Japanese yen.
No. If you look at dollar yen pricing right now, it's looking...
The carry trade back on? Surely not. Not this again.
Right.
Come on, guys. Come on. Surely not. You're pulling my leg. The carry trade could be back on.
The carry trade could be back on. It's difficult at the moment, isn't it? Because we keep in the back of my mind, I'm thinking volatility is rising, right? If you look at the VIX, the volatility index at the moment, it has been rising. It's obviously had a little bit of a sort of downfall over the past day. But if we look at the sort of overall trend of it, it is moving higher, right? So it makes me not necessarily want to sell Japanese yen right now, which is interesting considering the way the yen is moving. I want to look at potential sort of safe haven areas, and I want to be looking at that type of situation. I'm basically what I'm waiting for right now is the equity market to play out. I want to see where equities go.
Play out.
Yeah, because I think if we see equities, or when I say stuff like that, like S&P 500, for instance, if we see the S&P 500 break higher and it just go, then I think this volatility shift is going to happen. And I think we're probably going to see volatility index dive a lot lower, which is then not going to necessarily mean that I want to be involved with safe haven assets on the buy side. I want to be more on the sell side of those. I think we're at a very critical point in what happens next. I mean, there's a lot of stuff going on as well. Like, obviously, we've got the hurricane coming in, which is going to be one of the largest hurricanes in the past century to hit Florida very shortly. Actually, is actually
yes, it'll be. I think it's 18 hours. No. I think it's it's about a little bit less. I was chatting to someone from the area. I think it's about 17 hours from now.
Oh, okay,
when it's expected to hit landfall.
Yeah. I don't know how much that will impact. Obviously, it depends on the damage that is caused, but it's expected to be a lot of damage. Could be billions of dollars worth of damage in the US. It could obviously impact, I guess, oil prices in a particular way. I guess if there's some kind of trading down through in the sort of Florida area in terms of oil, it could be impacted in some kind of way. I'm not 100% sure on that either, but it's an interesting concept at the moment. I think the market is sitting in a place where obviously the volatility is there, but it's not being reflected in other assets. That's what I'm trying to get to. I don't feel like, we saw a rally similar to this in September. But if you look at the decline in the S&P in September versus now, it's not gone anywhere. It's not. It's like it's sat in a range. It's sat in a range, which is super interesting to me right now. Look at the move we had in September. That sort of spike lower. That was because of that volatility move that we saw in the VIX. We haven't got that now. There's this hold in the S&P. And I'm a little bit worried about getting involved in anything. I guess that's why I've kind of not traded too much recently, because I think there's a saying that I like to or I've heard in the past that I like, which is when in doubt, stay out. Right. And I think that's where my mindset is at the moment. Is I'm in doubt of what I'm seeing in the market right now. I don't understand necessarily. The correlations aren't there right now that I typically work with. So I'm not going to necessarily be going into markets until I get those correlations back, right? Trading's not, for me, is not necessarily about trading every single day. It's about when to trade, when to be involved with the market. I don't think this is a good time to be involved for the way I trade at the minute, because I'm not seeing what I would class as, yes, volatility has risen, but I'm not seeing it being reflected in the assets that I feel it should be.
Yeah, I stand with you. Seeing the VIX go higher, yet stocks not come down. US dollar gaining a lot of strength. We talk about kind of the Japanese yen weakness. I'd argue that it's predominantly US dollar strength. I mean, have a look at that. That just looks like the US dollar Japanese yen chart, at least here recently. And you see that kind of situated and everything. We talk about the weakness in commodity currencies. I guess and I don't know why this is only just occurring to me, but that carry trade makes a lot of sense. The comeback of that carry trade makes a lot of sense, and it would make sense for this. And it also makes sense for a lot of these assets, when everyone else is looking at cutting and then they print a massive jobs number, which is just completely against everything. And now they might get to a position where they're like, hang on, don't cut, don't do anything. Let's see where this goes. Yeah, the carry trade could definitely be on the cards. I still stick with, I don't like the idea of shorting the Japanese yen. I still, I'm not a fan of that, but I think it's interesting. I think it's interesting, and I agree with the sentiment of what the fuck. I agree with that sentiment. I really do. We look at the seasonal correlations. There's not much there. Let's get into freshly squeezed. Let's have a look at what we're seeing today and kind of where prices are at. You're already getting a view of my chart, but let's walk into freshly squeezed. This is a shake up. Good morning, everyone. Remember, if you're joining us at any point, do chat and chat. We are live. We do want to bring you up on here and have chat. If you've got questions about what we're talking about, concerns about what we're talking about, or you want to challenge our analysis, please do so. It allows us to look at things in different angles, but it also allows us to be sure in what we say, because as macro traders, it's so hard to be sure in your analysis, and we're always changing. Without further ado, let's dive through the prices. We're going to start up in the top right corner here with the Aussie dollar down 0.2%, the euro down 0.15%. Let me make this a little bit bigger for you. The Great British pound down 0.2% today. Moving in the US dollar CAD, we're up 0.15%. US dollar Japanese yen, which you can see on screen right now, right here, is up 0.2% so far today. The XJO is actually selling off a little bit, but still in this range. Look at those wicks on the Oz 200 right now, down 0.34% today. The DAX is down 0.28%. The Nikkei is down 0.35%, trying to climb back up to those all-time highs. And around, actually, sorry, I might be misquoting the all-time highs, but the most recent highs at 42K. The FTSE is up 0.1%. You want to talk ranging market? Oh boy, have a look at that. That's good fun. And the S&P 500, like we discussed, also going sideways at 0.25% down so far today. Coffee's up 0.25%. Gold's down 0.3%. Nat gas down 0.2%. Silver down 0.3%. Sugar down 0.1%. Oil down 0.1%. That's recent. Oil just making some moves, crossing behind the day. Have a look at the last 2 days on oil. If you're a price action trader, that is an interesting pattern to be looking at. Moving into Bitcoin, unchanged, Ethereum unchanged, and as discussed, bonds were pretty much unchanged, both in the US and here in Australia as well. Talking FX calendar, talking economics, John, what do we have coming up today?
Well, we have the FOMC meeting minutes coming up today at 7 p.m. UK time, which is going to be something that I think the market might be on tender hooks for as well. What is the feeling from the Fed? What was spoken? What's going to come out of these meetings that's going to be a market mover, essentially? Did they talk about being more aggressive with cuts? Why have they cut? Is it from a point of view of, yes, this was a cut because we could cut, and it's, we're trying to front run any kind of sort of, I guess, deflation in the future. Obviously, the recent jobs report is kind of suggesting that otherwise. Essentially, is this the soft landing that we're expecting? Or now the conversation is no landing, right? Soft landing versus no landing. It was hard landing, then soft landing, then no landing, and it's all just kind of all these landings, and we don't know what's really going on.
That's too premature for me. Anyone saying no landing, I think that's way too premature.
I think so.
We've had one positive data release. Like, come on, get your head out. Like, one. We've had, how many times have we had one good release in the past 3 years? Let's see what the data actually suggests. To be saying no landing, I think that is just silly.
Yeah, I know. I agree. And again, I think that's been reflected in the volatility index. I feel like why are we seeing that rise in the VIX? There's a reason behind it, and I think it's because people are on, or investors are on, a little bit of a knife edge right now. I think they're expecting something to rattle the cage, and they're waiting for that moment to be rattled. But until then, they've got to continue following the similar paths that they've been on until they can really assess anything. And, it could be a big shakeup when the election comes, right? Because the election is, I haven't done much research into it yet, but obviously we're going to, because we're going to, talk about it a lot coming up. Because it's a month away now, the election. And I'll be interested to see how polling now starts to come through and how that changes the narrative of the markets. Is the market basically waiting for this election to be over because it's so tight to know where to position themselves going forward, right? Because before it was almost like, okay, clear winner when it was Biden versus Trump. Trump's going to take the lead. Trump's going to win. So the markets could prepare themselves for that.
The Trump trade, right? We had a whole segment on that and chatting about the Trump trade.
Yeah, exactly. And now that's kind of gone away, right? Because Kamala Harris has come in as the candidate to face Trump, and they had the debate. She clearly won the debate. He got very rattled. She was very calm. She wants another one just to try and put more pressure on him, I guess. He doesn't want that because he thinks he won. So it's just super tight right now, and it's come to a point where it's uncallable of what happens. I did see some analysis before that usually if the S&P 500 has very good performance, usually the people that are in charge stay in charge. If it's the other way around, it can change. And at the moment, the S&P 500 has rallied but is going sideways. So again, it's just showing you, I feel, how tight this is going to be.
It's a close election.
Yeah, and I just wonder if markets are just going, okay, this is actually a lot tighter than we've expected. Maybe we should hold back on what we do and where we position ourselves, and maybe look at different types of assets instead of going into the US. Really,
okay. But if that's the case, what assets are they going to?
That's a great question, and that kind of brings me on to my big boy.
Oh, okay. Okay, so okay, I like it.
I'm gonna focus on your favorite asset as always. I'm gonna focus on gold. Okay, because this is where I feel it makes sense to be because of everything that's going on at the moment. Now, obviously, we've got the play at the moment. The dollar's getting a bit more bullish. We've started to see that reflected in gold prices here, and it has started to move lower. But the correlation between the dollar index and gold has been coming back, but not as clear, right? So usually we just click on here, click on the dollar index. We can just add, that's not the dollar index. If we just add the DXY onto here, typically we would see a very strong correlation, but there's been times in the past where that hasn't necessarily been the case, right? Typically when we see those gold prices rise or dollar prices fall, gold prices will rise. We've had quite an extreme move up in the US dollar at the moment. Gold also kind of making that little bit of a move lower. But I think if the market's going to be in this state of being on a knife edge, where would I want to be invested in? I would want to be invested in something where I would be like, okay, there's usually growth in that market. There are other aspects out there that is very risk averse. So I'm going to go into an asset that usually performs well in risk markets. That to me is gold. I was looking at the seasonals on gold as well recently, and there's this sort of all years correlation, which is like a 92% correlation with what's going on with current price. Within an election year, we've got a 40%, which isn't fantastic, but it's erring on the positive side, I guess. And then I've done a custom one here that has a 93% correlation with price. And typically around this time of year, we can see a little bit of bearishness coming into it. Now, obviously, the election is going to have a big weight on what happens with these prices. But I feel like there's a lot more risk to the market at the moment. So I'm looking for continuations of this gold move. And I think this is going to, again, have a lot of caveats to it. There's going to be a lot of dependencies for me on this. It's whether we get that risk rally, and it's whether, or sorry, the risk off rally, and it's whether we see those US stocks fall. And I think if we get those moves, we will get a move higher in gold again. If we don't, then it becomes a little bit like, I'm thinking that the market of gold could start to roll over a little bit. Commitment of trade reports. They're also giving us a little bit of an insight to kind of what's going on in the gold market at the moment. You know, typically I watch these quite closely when I'm looking at gold. I still don't think the market tops here just yet. If we go down to gold, we can see that obviously there has been sell signals in the past or recently. But if we look at where the position in short is still from our commercials, they're high, but they're still not at, again, aggressive levels where you would expect them to be. So I've been talking about gold still has legs for, I feel like, the past 3 months. I feel like every time I've talked about gold, I feel like I've said this market has still got legs. Granted, look at the price now. You know, this is becoming very favorable, I feel.
A rollover too, though.
Yeah. You know, that to me is like a price action, which I'm thinking a lot of people will be thinking, this is going to give me an opportunity to get into this. It's almost like when we saw that little bit of a blip in September where we saw stocks drop and things like Nvidia came back into real key levels and everyone was like, oh, do we buy now? Because, you know, these are really nice levels to be involved with. And we saw that. And obviously Nvidia did rally back up and stocks did rally back up. I feel like there's a very similar notion here for gold, and it's starting to come back into levels which make me interested from a swing trading point of view. You know, I like this level down at 25.75s, down in towards the 52s as well. You know, anything around these kind of areas here I feel would be good areas to look at. Obviously from a weekly perspective, you know, this area down here makes a lot of sense. This $2,530 area is that small kind of consolidation before seeing a big move outside of this area. So I'm going to be looking to be active in the gold market when it comes down into these type of levels, because I feel like market's on a knife edge. It's going to go either way. I feel like gold would be a good place to be involved in kind of either situation, right? I think gold's going to be the market mover. It's had such an exponential rise. You can look at it in twofold. Is that going to continue? Is that worth it, right?
Let me be devil's advocate, if I
Please.
may.
Yeah.
Before I do, what's your thoughts? Long gold, short gold?
I'm long gold. I'm long gold.
The rollover we've seen in gold here, and the US dollar for that matter, is backed by data. I think premature, but backed by data. There's real money seeing this job's data, and it wasn't just the release, right? They obviously revised the previous numbers to make it look better, or turned out better.
To make it look better. Yeah.
You decide whether it will make it to look, or you know, I'll leave that in your court. But those numbers were revised, right? People have gone, actually, we're actually pretty good. Let's go long. Most people were situated in short dollar, long gold. You don't need to be smart to see that. You can see the price action. Look over the past 2 years of price action. Like, you can see where people have been positioned.
Yeah.
That jobs report has caused a little bit of a position unravel and a potential run back to the carry trade for at least, I don't know, maybe 6-7 months. And that's what's caused this demand here. Now, if that remains true, and this data does confirm the suspicions of the early gamblers, which is who's reacting now, I see weakness in gold. And the reason I see weakness in gold is because the run we've had has been astronomical. There is so much weight to the long side in gold that even an ounce of see what I did there? Even an ounce of negative atmosphere in gold will cause a sell-off. It will cause people to go elsewhere, especially if the carry trade's back on. Those long-term investors will move straight back into the US dollar. So
that's why I feel like the caveat is there for me. I feel like if we see the stocks go on a rally, then I don't want to be positioning long gold at that point.
But I feel these will happen at the same time.
You do? Okay.
I feel the reason stocks will rally is because it'll be people unloading their gold positions to get into equities.
Yeah, so gold should move lower, right?
So gold should move lower. with it. Like I'm talking symmetry. Within a matter of hours, they're doing the same thing. You know, like I don't see like
that's what I'm
breaking
saying. I don't
high running and then gold.
Yeah,
I don't see that happening. Like by the time you see gold, you see stocks running, I think gold's already dropped.
Okay. Right. Okay. So you think gold is essentially going to be the lead indicator into what happens into the S&P in a way?
In a way. In this specific scenario, yes. Like it's all about looking at where people are positioned now. And you can see, because where supply and demand, that's what all these charts are. Where are people positioned? It's gold. It's slowly getting into the US dollar. It's heavily in the Japanese yen. If these positions begin to unwind, they're not just going to go back to cash for fun. These are hedge funds we're talking about. These are very large banking institutions. They will be risk on somewhere. I see them taking that and then going risk on in equities, but in order to go risk on in equities, you have to have either leverage or take out your positions elsewhere. So I'd see the it's like a seesaw. When that goes, that also goes at the same time. I think it'll be hard to watch one go and then react and go with the other. Like I don't think they're going to be balanced that way. And that, if that makes sense.
Yeah, and I mean, like when we look at sort of it compared to the election year, or if we look at just an election year in general.
This is gold we're looking at here.
This is gold, yeah. We do often see it kind of have a little bit of a sort of downside move towards an election, and then beyond that, right? So, it's an interest. This is what I think gold's an interesting market to keep your eyes on right now. I think it's twofold. I think the way you've explained it is
the risk.
Is the risk, right? The way I'm looking at it is if the risk goes the other way, if it tilts the other way, if we do see what we're almost expecting from our bigger picture point of view of what's going on with the market, then I think that we are going to see that gold continuation in a way. But it's either way. I think gold is a market where everyone is focused on. There's a lot of market movement going in gold for the past, however months now. I still feel like if we do see that tip towards risk, and again, I'm going to use sort of what's going on in the VIX as well as a little bit of an idea of where the market is sitting in terms of volatility. Then I still like this gold long play. But that is all going to determine on what happens next, right? And I think that's, again, one of those where you can look at it as like a watch list, right? I think you can have a lot of if buts in this situation. You can have, okay, well, if we do see those equities go, then gold isn't going to be the area because, like you've explained, the market's going to want to go risk on. It's going to want to go and take the money out of the risk off assets, go into. That's where I'd see sort of value in short in yen as well. But yeah. We can talk about that.
No, I like it. I like it. It's thought provoking. I don't like gold.
We've got a personal vendor, so that's why.
You should have known coming into this analysis I was going to pick it apart. You mentioned gold.
That's what I was like every single time.
But I got a little take it to go. Just a food for thought. All right, it's not really analysis. The Florida storm. I got a bit of a map here on where it's headed, the times it's expected to arrive. Currently still sitting in a Cat 5, expected to be a Cat 3 by the time it makes landfall. But you can see the sheer size of this thing is outrageous. Where it's red on the map here is classed as hurricane winds. That is the hurricane warning, all of that of Florida. And Florida is not a small state. No. This is that's almost the size of England. It is just phenomenal, right? So I haven't looked at what market impacts might be yet. I do know that they produce, fun fact, 51% of the US oranges. Citrus fruits, massive in Florida, farming citrus fruits. I also know they do a lot of sugarcane because of the climates. We know, obviously, the US produce a lot of sugarcane as well. So there are going to be commodity markets that are affected by this. Not to mention Miami, and everywhere in and around Miami is a huge tourist destination. So lots and lots of tourist money at risk here as well for the GDP of the US. This is quite a large storm economically. They're already dealing with the floods and the other storm that they had recently, and the problems they've had there, and now they're going to get hit with another. So keep your eye on this. It makes landfall before our next stream, so we will be able to talk a little bit on it tomorrow. Hopefully it's uneventful news. Fingers crossed it's uneventful news, but it is looking like this is going to be quite a problem. And for whatever, that's your homework for everyone. Go out there, figure out what it is that what prices, what stocks, what commodities are going to move and be affected from this. Come back tomorrow and let's talk shop. In the meantime, John, it's gone. It's 9 a.m. British Standard Time. It's send the guys over to the live trading floor. Guys, enjoy your day. We'll be back tomorrow to do it all again, 8:30 a.m. British Standard Time. Make sure you've liked and subscribed. And John, we'll see you in the morning.
See you soon.